Hello, my name is Gui Costin, founder CEO of Dakota, and the Dakota Way is officially live on Amazon, where you can buy it right now, both Kindle and soft copy. The Dakota Way covers the 4 core principles of investment sales, which is 1, set expectations, 2, know who to call on, 3, know what to say, and 4, have a killer follow-up system. These are our internal nomenclature for how we describe the things that we should be doing to become world-class fundraisers. It's all in the book. It's incredibly simple, which is the good news. You can buy it on Amazon. I promise you it works. And if you have any questions, you can always email me at guy@dakota.com. The book's available at Amazon right now, both in Kindle and softcover. Thanks so much and have a great day. Please join us for the Dakota Way sales coaching based upon our best-selling book, The Dakota Way. There are only 4 areas that we believe you can really control as a fundraiser: setting expectations with your boss, establishing your TAM and where you're going to sell, becoming a master messenger, and having a killer follow-up system. It's those 4 core principles that you can control. This is something you're not going to miss, as we're covering the 4 core principles that will turn you into a world-class fundraiser. Can't wait to see you in the next Dakota Way sales coaching. What is up, everybody? It's Gui Costin, founder and CEO of Dakota. Welcome to the 29th episode of the Emerging Manager Growth Show. Thanks so much for joining. I am joined by my longtime colleague since 2011, Tim Dolan. Tim, welcome.
Thank you. Thanks for being here.
Love having you here, my man. And we do this show because we love emerging managers. So all we seem to do is work with emerging managers. That's our expertise. We started working with Spruce 3 years ago as a third-party marketer. We started working with Edgewood in 2006, $3 billion AUM. So in that category of emerging manager. 2009, Hamlin, just about $1 billion under management. Spyglass, $17 million under management when he started, got him up to $5 billion. And Hardman Johnston, also an emerging manager. So I just say that is that we're fundraisers ourselves, do it on a third-party basis. The whole goal of this show, Tim, is to help people do more with less. So less budget, more focus. Now, I have to shamelessly just say that we did release the Dakota Way book on February 11th. It's our 4 core principles of investment sales of turning into a world-class fundraiser. It's everything that we've been following since 2011, truly to a T. It's very straightforward. Basic might be a stretch, but it goes through what you need to do to become a successful fundraiser. And it's 4 elements with 3 sub-elements of execution beneath each one. And the important takeaway is that if followed, it works. I promise you it works. And with that, it's live on Amazon. And Tim, why don't we let's get into it?
Yeah, well, first off, congratulations on the book.
Thank you.
And I've obviously been living in now for 14 years, since 2011. And so for me to live it, right, and now to see it in paper and for other fundraisers, there is no sales coaching for what we do, right? So now to have this blueprint, it's amazing, and the feedback has been unbelievable. So again, congrats.
You got it. And so we work with a lot of long-only managers, clearly 1 private credit manager. Tim, let's just talk about, just so everyone knows, money in motion, okay? And the fun thing is following the principles of the Dakota Way. Keep staying in front of investors, booking your meetings, doing the cold outreach, booking meetings, and booking meetings, right? That's the goal, sending emails. We understand it's about a 1 for 25 or 1 to 30 ratio, but you still got to do it and look at the results we've got.
Absolutely. I mean, it's that consistency and persistence of being in front of the appropriate buyers of your strategy. And that's what we do on a daily basis. I mean, the money, to your point, money in motion. I mean, the search activity that we're seeing, little this week, but year to date, I mean, it's parabolic. The asset classes that are being allocated to, the searches, the search sizes. I mean, there's a lot going on, and it's fixed income, it's equities, it's credit, it's venture, it's private equity, it's real estate, real assets. It's all across the board, which is very exciting. So,
and so when we talk about this, I truly have my opening. You have to absolutely resign yourself to the fact as an emerging manager, and frankly, for any fundraiser, that you're a professional meeting setter upper. And that's really, if we just had to end the show right now, Tim, we are going to cover family offices and the key family offices, why you should be calling on that market as an emerging manager, because they're always looking for new and interesting investment ideas. That being said, you can't get out from underneath sending emails to book meetings using a city scheduling program like we have in the book and we talk about in the Dakota Way. So that is like, number one, you have to commit. And I know it sucks. I'm not going to sit here and tell you that it's fun sending 30 emails and getting 1 or 2 meetings if you're lucky, right? That's kind of the reality, and that's how you book up days. But with a consistent application of that.
Yeah,
right?
absolutely.
So the key takeaway, just to kick off the show as a third-party marketer, is got to do your city scheduling.
Exactly.
And then for those of you that don't know us, just one last thing. In 2019, we took the database that we raised $25 billion as a third-party marketer since 2006. We commercialized that database. Today we have about 1,250 investment firms as subscribers, about 6,500 fundraisers that use our LP data every day to book meetings with potential investors. So that's another thing. So we even have a whole nother level of kind of business and credibility around, because we really built the database. So we had the most world-class database to execute the Dakota Way, because a key component is cold outreach, and you want to be reaching out to the appropriate people and not having emails bounce and having the wrong information or missing people that you should be calling on. So that's why we created the database, and it's been a blast. It's also been really fun to get to spend a lot of time with our industry colleagues. So it's been a direct result of that. So you were just want to get into, so we know money's in motion. I guess that's a big takeaway, because a lot of people are like, oh, I'm not raising money. We're winning a ton of business for one reason and one reason only, is we consistently do meetings and get in front of potential investors.
Yeah.
Not saying it's easy in any way, shape, or form, but the payoff's huge. So just want to dig into family offices and the benefits there.
Yeah, absolutely. And what I would say before we get into the family offices, which is our focus channel today, I do want to emphasize to everyone on this call how important the RIAs are, right? For an emerging manager, when you are small and new, there's a certain amount of channels that you can go to, and the RIAs are definitely one of those, because they have discretion and they can invest in new and small managers. So we've done prior shows on the RIAs, but also coinciding with the RIAs is the family offices, right? It's very fragmented. It is tough to navigate them because sometimes they're hidden, but we can discover them through Dakota Marketplace in other ways. But
well, when we did Spruce, which is our private credit strategy, they were on Fund 2 and Fund 5. So they had sort of small loans, and they were smaller funds. They were on Fund 5. We were helping them with their larger loan portfolio, which what did that fund end up closing at? Fund 2?
$275 million.
275. We told them, and we knew for ourselves, we were marketing Fund 2, but we were laying and planting all the seeds for Fund 3, which we're in right now. So just as you're thinking about the game that's being played, there's sort of a game within a game. So if you're some sort of a private credit, private equity strategy, you could be playing for the next fund while you're doing this, because what you're trying to do is you're trying to build your brand in the marketplace, make it well recognized, getting them to know your strategy. And you got to do that with meetings. Another tip that we would give you, it's a 2-prong webinar tip. Quarterly webinar, absolutely. If you're doing a first time sort of getting into the RA channel, you absolutely positively should do an opening webinar for your strategy. Invite everybody to listen in. You're going to do a 20-minute introduction into who you are and what you do. And then from there, you'll go do follow-up and book calls, and people will get that invitation and they'll see everything. So quarterly webinar, updating everybody on the quarter is mandatory. It's kind of free. It's just your time. And then if you haven't done an opening one yet, you do an opening webinar introducing the strategy.
The opening webinar is great because it's effectively the introductory meeting. So not only are you going to do it at that point in time,
right?
You have it recorded and transcribed, and then you can send it to RIAs. They have it and they can watch it whenever they want, right? And learn about your firm and strategy.
And We walk the talk. This morning I did a call with the CEO of a venture fund. We're on fund 2 with them, helping them out. First thing I said is, he goes, what do you think's going to happen? I said, well, we need to book the introductory webinar just to broadly introduce the strategy for 20 minutes, and then it'll spawn all the follow-up. It'll create content. There's a lot of benefits from that. So those are 2 huge tips, in addition to the first one about doing the cold outreach consistently every single day in order to hit these channels, RAs, and family offices.
All right, so digging into the family offices, as I said, it is fragmented. They can be tough to find, but what we do find with the family offices is the network effect, right? And so a lot of them speak to each other. They meet monthly or quarterly at dinners and lunches, and they share investment ideas, right? So staying in front of these folks, having one investor, right, you're probably hitting another 5 to 10 family offices, and you don't even really.
So that means even a no could turn into a yes because of the referral and how they exchange information.
Yeah.
So again, the goal at the end of the day is to make everyone you possibly can that you know who allocates to your asset class familiar with your investment strategy. It's shoe leather, and you get some leverage with webinars.
Exactly. What I would say for the most part, and this might be an overgeneralization on the family offices, but looking at investment strategies, largely LP users and separate account users from a fund structure standpoint. Again, there might be a few that are using ETFs and mutual funds, but largely LPs and SMAs, they absolutely can be early adopters as well as seed investors.
And we'll follow up with all the notes here on the family office that Tim's running through right now.
Just a couple to cover for the purposes of today. Some key family offices that we've known and gotten to know over time. But in Chicago, you've got Longview, which is the Crown family, CM Capital out in Palo Alto. This is the Cha Che Ming family. Arnell and Affiliates. This is George Ajarios in LA. He used to own the Seattle Mariners back in the 80s. Olympus Ventures, that's the Best Buy family in Minneapolis. Moose Partners is one of the largest in the country. That's the Chanel family. And then Willett Advisors is Michael Bloomberg's family office. So we know those folks. They definitely look at interesting investment strategies for sure on the alternative side. So just a couple to be thinking about in your travels.
And then you say, what's topical?
Yeah, I think for just given the nature of family offices, tax efficient income always, right?
Yep.
They, for the most part, they are taxable individuals. They might have a foundation set up, but always looking at tax efficient ideas. Secondaries, just given what's going on with the liquidity market or the illiquidity market on the private side, that seems to be topical. And then always co-investment. So if you have a strategy that you are fundraising for your fund vehicle, but you have the ability to offer co-investment, that only enhances the relationship.
So I'm going to go through what we consider to be our fundraising best ideas. So these are tips, tricks, techniques that we believe you should be using to have success. So first off, using city scheduling, we always have 5 cities on the calendar at any given time, gives a salesperson intent, and you have 9 o'clock, 11 o'clock, 1 o'clock, 3 o'clock, and 4:30 for your scheduling times. When one city falls off, you put another one on. Again, back to the concept of we all are professional meeting set-uppers. Email, 3 components to it. Subject line, meeting request, date and time. Body of the email, 1 to 2 sentences, who you are and why they should care to meet with you. Third component, clear call to action. Can you meet May 4th at 3 p.m.? ? I promise you it works. You're going to have to put some time into the 1 to 2 sentences. People don't want to read paragraphs. They're not going to go down. Don't include a lot of performance. Simply state who you are and what you do and why they should take the meeting, and you can have a lot of success.
We do have to emphasize the clear call to action because we see a lot of emails that are, let me know if you're free next week, or I'll be in town the week of the 28th. Are you available that week? Like, that's so broad and random, and you're actually
just wasting time.
Yeah.
And it's insulting to the person receiving the email because you're asking them to do the work for you.
Yeah.
Or you do the work for them, tell them, can you meet? And they say, no, not on the 4th, but I can meet at 2 o'clock or 9 a.m. or I can meet on the 3rd or the 5th.
I mean, the best response that you can get is, yes, that works. You're like, boom, put it on the calendar. Or if they say no, then you got your no and move on. At least you've got an answer.
Another key marketing, as I said, is your quarterly webinar. Make sure that's part of your whole routine. It works. I just got an email from a guy thanking me because we're having this conversation like this about a quarterly webinar. He goes, you know what? You told me First episode I do, first quarter webinar, 0 listeners. I said, yeah, 0 listeners. You're going to send it out and 0 people are going to show up. Then you do it the second time and the third time. And he goes, now I have over 110 people listening. It's been unbelievable. So I promise you, it works. And you're also your time where you can really flex your muscle.
Importantly though, allocators and analysts, when they're reviewing your strategy, they'll ask for the prior 3, 4, 5, 6 quarters of webinars, because they're going to watch them and see the points that you're making over time and if there's deviation. So that's part of their research process as well. So you have those archived and you can share them. It's not only that point in time marketing, but also at a certain point, they'll need it for historical as well.
Huge, right? So all this stuff serves a lot of different purposes. And we wouldn't be telling you to do this stuff if, number one, we didn't know that it really works, because we're living and breathing it every single day. Okay, 3 things to close out. Number 1, leveraging a CRM. It's the only thing that gives the salesperson 10x leverage. You have to get the meetings you scheduled into your CRM, and you have to get some level of call notes. And then you have to create pipeline reports by creating opportunities with 2 custom fields in the opportunities: current status, next step. Mandatory. It literally will jumpstart your productivity, because if you're doing a ton of meetings, then you can run past activity reports in your CRM. If you don't get the meetings in there, you can't run past activity reports, which trigger sales actions, which creates insane efficiency, and like I said, creates action activity for you. Second thing, creating alignment. Now, I cover all this in the book, okay? But just in terms of creating alignment, I can't tell you how important it is to break through the rule of 18 months. If you don't do this, you leave yourself in peril to get fired after 18 months. You have to write a sales plan, get agreement from the CEO or your boss, and then meet regularly to review results against the plan. You said what you're going to do, then you got to tell them how you're doing against your plan. We prefer weekly. I really wouldn't let it go more than a week. If you do, I guess every other week, but that scares me, because if that meeting gets canceled, then it's pushed to a month. And then, right, it's a forcing mechanism for you to come with a robust pipeline and to show how well you're doing against the plan. Lastly, these are all leverage points, and the book truly is one big leverage point. That's all it is. We documented all the things that any salesperson can do to create leverage for themselves. Lastly, here's how. It's 2 toughest questions, Tim.
Yeah.
So everyone asks me, how do you follow up after a meeting? And I said, don't. We follow up in the meeting. And what do you mean by that? Well, you ask the 2 toughest questions to close out the meeting. The meeting's concluding. Look over at Tim. Tim really enjoyed our time together. Question for you. What's that? Do you see our strategy fitting in your asset allocation model? If they say no, mailing list. If they say yes, your next question, the second tough question you have to ask is, if we fit, that's great. Do you anticipate doing a search in the next 12 months? If they say no, mailing list. If they say yes, do you think we can include it? Naturally, they're going to probably say yes, and then you figure out what the next steps are from there. If it's a private fund, and you have a closing, then you say, if it's a yes, can you make the close on 9/30/25? If no, we need more time. Maybe you can fudge the closing a little bit. If it's a no, mailing this. If it's a yes, then what are the next steps that we need to do to better familiarize you with our strategy? 99.9% of salespeople do not ask those questions. Then they wonder why they're getting ghosted. Then they come back to their office and say, how was the meeting? And they say, great meeting. We ban that term. You can't say great meeting at Dakota. Just tell us what happened.
Yeah.
What's the status? What's the next step? Nope. We asked them. Right now, they're not doing any searches in large cap growth, but the good news is they do like concentrated managers if they're ever going to do that.
You're actually doing the analyst a disservice by not asking these questions, right? Because they might already know it's a no. And you need to know that as a salesperson, so you're not wasting their time.
Exactly.
And they might already say, wow, this is super interesting. Maybe it could fit in our search in 9 months. And they don't tell you that unless you ask the question. But now you know, and now you can support their process. So without asking the question, one, salesperson, you have no clue and you're guessing. You rather want to know, but then for the analyst, you're helping them.
100%. Now, lastly, just to close out, so emerging manager conferences, you've got we'll have this in all the show notes, but ILPA Institute on March 12th. You've got the same one on the 13th. The first one's in London. The second one is also in London. It's back to back, I guess, sorry. On On 4/16, you have the 2025 Pension Investments Markets Conference for emerging managers. And then on 4/29, you have the McGuire Woods, which is an awesome conference. Highly recommend for an emerging manager going to the McGuire Woods. That's on 4/29. These will all be in the show notes. So just to recap, like I said, the book is available on Amazon. Don't make any money selling the book. What we want to be able to do is provide value to you all on the things that we do every single day to get results from fundraising. Tim, thank you.
Thank you
for joining. Join us for the next episode on April 8th. It's episode 30, April 8th at 1 o'clock Eastern. Thanks everyone for joining. Have a great day. Hello everyone. I just wanted to say thank you for watching the Emerging Manager Growth Show. I hope you got a lot of value. And I think, as you know, we shared an enormous amount of information about metro areas and other type of information, RIAs, etc. All of that information exists in Dakota Marketplace. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.